Hey team, J6.4 here. Not financial advice, but we do have something that we want to talk about. Since we have all of these high risk robots that we're working with and we're compartmentalizing small accounts, here's the question. Can this high risk robot pay off my mortgage or at least accelerate the process? Have a one disclosure. It's not my mortgage, but I do have a friend and she wants to pay off her mortgage early because she likes to retire early, but she's not going to do it before her mortgage is paid off. And she threw this question out. Hey, can one of those robot things of yours can it make me enough money where I can retire early by paying off my mortgage? My answer is I don't know, but let's test it because it's so far so good. And as you well know, guys, if you're watching this, that the highest rating that I can give any robot is so far so good because anything can happen at any time. So let's go into our really simple plan. This shouldn't even take that much time. As you can see here, I'm repeating myself whenever I say we are not business or financial advisors, and this is not financial advice. This is our money. This is our experience. And if you want to track us, you can do so. Here we go. I wanted to give this a name, so I went straight to Chat GTP, and the best thing that they came up with was mortgage payoff investing. The definition they came up is investing with a specific goal of using the returns to pay down or pay off your mortgage faster. So I went in and I said, all right, what if I had a possible goal? Now, I'm not saying probable, but a possible goal of putting in $500 into my friend's account. And we're averaging 9% a month. That's outrageous. I know, but this is trading, not investing. Remember that. This is trading. What would that look like if we did hit like around 9% a month? Again, possible, not probable, for 5 years or so. Maybe sometimes less, maybe sometimes more. But let's take a look at this, and I'm going to show you the robot and what it's doing present day with real money to see if this is even a probability. We know anything is possible, but we don't know if it's probable or not. Okay, here we go, guys. So we have $500, 9% a month, compounded, and this is month by month for the first year. Then we'll just break it down to the year here. So we're looking at $500 at 9%, and you can see after the first year has a little bit over $1,400. So it would definitely over 2x it, right? 3x it actually, pretty close to 3x it. Again, possible, not probable. I keep saying that, guys, just to manage expectations. By year one, the balance should be up to around 1,400. Year two, 3,900. Year three, 11,000. Year four, 31,000. By the end of the fifth year, we're looking at $88,000. Now, here's the cool part about it. This is monthly profit estimate if that were to happen like this in real time. By the time she's in her third year, she pretty much has enough for her account to start paying the mortgage if she just didn't want to compound it and pay it off at the end of the 5 years. Don't know that because there's a lot of things that happen between here. So here it is, monthly income after year one, $126 a month. So that would accelerate it instead of just taking $500, adding that to her principal one time. I think I would rather invest it. And after 3 years, here we go. Monthly income is right over $1,000, or right at $1,000. And uh, after 5 years, we're looking at the monthly income at this rate at 7,900. People will tell you that's easy and it's probable. No, it's possible, not probable. But anywhere in between this would be absolutely amazing. Everyone can agree with that. Even if we're generating $500 a month in the fifth year, hell, I'm not giving it back. All right. So let's talk about some of the particulars with this. A, how do we find, and if you guys don't have our little chart on how do we find robots for small accounts, just go to our Patreon group. You can download it. You don't even have to put your email address there. You can go straight and just download it, and it'll give you a little insight on how we test these robots to see if they actually work and perform on small accounts. So let's see here. So here's our high risk real money results on this T-Bot trader, which is a private robot. So when I was researching this guy, he gave me access to quite a few of his stats. So this is 2025, and you can see right here, I really just take this month out because I never want to consider the highest or even the lowest when I'm making my decisions. But here we go. He was 76% in March, and you see what he's done. And this is this year, and this is verifiable. So he was up to 38 not last month. What am I talking about? In June, and then we stopped that. He reallocated his funds, but in June it was only 4%, and that's only because in the first week he reallocated funds. But this is more important, guys. So his gain was over 300%, but this is important. His drawdown was only 5%. 5% drawdown. If you know, you know. And let's go to, and it shows right here, he deposited 1,000, he withdrew 4,600. So that's not bad. So I wanted to see another one. This one was less aggressive, but same old, same old. This was from January to June, and you see some of the more conservative numbers. And that's relative because, again, guys, 9% is ridiculous. A constant 5 and 4 and 5% is ridiculous, but it's killing it as far as this goes. Now, look at the drawdown. Only 1%. Only 1%. I will probably double the risk just to speed this up a wee bit, but it's a 1% drawdown, guys. And they're trading only one pair, and that is gold. And I'm using it to trade two pairs, which is gold and the euro dollar. So let's see. And here's one more. It's the exact same robot, but it's different risk management. And you can see here, 2025, um, everything from 5%, which was his lower, and this one is still going. So this is why I'm using this as the best example. But anywhere between 5%, 15% in October. You see the 11, the 10s, and that's why I say, okay, I'm cool with 9%. Okay, let's take a look at what's happening in real time. So I'm going to look at some of my accounts to see if they're right in line with some of his accounts. Okay, we started her account a couple of months ago, and so far so good. You remember that's our biggest, uh, our top of the line rating, which is so far so good because we know again that anything can happen at any time, right? So it's up a little bit over 12%. Our drawdown only 2.4%. And again, if you know, you know. If you don't, go to our Patreon group and we'll give you links to some uh, free free workshops and YouTube videos that we absolutely love for beginners. But nevertheless, just keep going. And when we look at ours in October, we made almost 9%, and it's November 15th right now. So we have 30 more days to see how this plays out, but we're at almost 4%, which is fantastic. Now, one of the things that we're big on, as you guys know, is protection. How do we protect the profit that we have or the profit that is producing on a daily, monthly, weekly, yearly basis? Let me show you. I didn't even go over this because I usually talk worst case scenarios at the beginning. But the worst case scenario that can happen is if everything goes to shit, um, you'll lose $500 because that's what we invested in here. So it was worth the risk after seeing some of the results from other accounts that was utilizing this particular service. But if things are okay and all things are equal, we're really just risking $120. Let me tell you why. I put an equity stop loss EA right here. And what that means is, you guys have seen it. We have drawdowns of anywhere between 5%. I think one of them was 10%. So what I did is I doubled that expectation. That's the cool thing about a back testing and also researching what other people have done with the same risk settings. So therefore, I'm not expecting it to hit over a 10% drawdown. Drawdown again is to pull back in the market. Let's just say that one day um, before the end of the year, I accidentally keep it on during Christmas, and all of a sudden it just drops. If it drops below 20%, and it's more than $120, it's just going to take me out the market. So it's going to protect any of the gains that I have left over. And I don't understand when people say I blew my account. I said, well, what kind of equity protection did you have? None. That's going to happen if you don't have equity protection. So that's it in a nutshell. That's how we're doing it. We will probably put this in a separate playlist so you can see how well she's doing in paying off her mortgage early. But guys, so far so good. And if you're interested in copying one of these accounts, you can do so in our Patreon group. So let's go out there and make some real money. Peace.